Hi and welcome to Trade of the Week. This week's trade serves as a useful warning about jumping into a trade too early, but it also demonstrates how a good stop-loss discipline can limit damage. Now, I have an unfortunate habit of always being a bit too keen on selling the FTSE. This could be my bond market upbringing, or as my wife says, because I'm a miserable old cynic. Whatever. I've been pretty good at predicting a good chunk of the rise from February's low, and have made money from the occasional uncharacteristic long bet. But on Tuesday I weakened. And when the index rallied throughout the morning, my mindset was on looking for a signal to go short. One of my favourite strategies for trading FTSE is to use a moving average crossover on the 30-minute chart, confirmed by an RSI below 48. However, this time I cut a few corners and ultimately paid the price. The first part of my strategy, the moving average crossover, happened just after 2 o'clock, but the RSI was still in buy mode at 67. Here we are. So I looked for some different clues, and I found that the RSI and the MACD were both trailing off. And furthermore, the candle pattern showed a doji followed by 2 red candles, which at that time had engulfed the body of the last green candle. That was good enough for me, and I sold £5 at 54.52. Setting my stop loss was easy. I chose 54.70, 10 points above the day's high, and on my £5 bet that limited my risk to £90. My profit target wasn't too ambitious. I felt that a pullback to test the 5400 big figure level was reasonable, and I'd be happy to take my gains within a few points of that. But things didn't go to plan. I was never more than 8 points on side, and the fall never took hold. After a couple of spinning top candles, the price broke the previous high and stopped me out just before 4 o'clock. Just there. My loss on the trade was 18 points on £5, taking £90 out of my account. So what can I learn from this? The key message is an old one. Let the market tell me what's happening, rather than looking for clues to back a preconceived idea. Although the moving averages crossed over, their direction was still rising, and the RSI was nowhere near the 48 trigger. My strategy wasn't flashing sell, so I should have left it well alone. Secondly, using candle patterns often proves worthwhile, but in this case I broke the rules, and I didn't wait for the candle to close. If I'd waited, I'd have seen that the close didn't engulf the earlier gains, and that would have made me hold off. But finishing on a positive, my stop loss was sound, and it closed the bet for a small loss. With the market currently at 55.60, that loss could well have been £550. Have a good weekend.